How are you today, baby doll? Sitting on your squeaky chair, observing the universe? We're going to talk about measuring risk today in a way you probably haven't heard. Everybody understands risk wrong on average. Of course, the smarty pants understand it properly. You see, most people measure risk by the price go up and down because that's what the smarty pants do. The nerdy smarty pants who have pens in their front pocket. These people with pens in their front pocket, okay? We don't want to do that because we will be measuring risk wrong. I have a beautiful post here for you. People measure risk differently. You got to know the difference. Look at this. Let's go through the paper hands. Funds, paper hands. VC, also known as vulture capital, also known as very cuck, plus traders. These three paper hands, okay? They measure risk by volatility. So the price in 6 months. So I have a chart here of Bitcoin. Maybe you've heard of it, okay? The risk for them, okay, this is not our measure of risk, but for them, their risk is they say, okay, well, if I take a year and I travel a 1 year, they want to know, okay, did the price go up or down? And they believe that if the price went from, say Bitcoin down here, if it went from 1 cent up to $1, down, right, to like a quarter of a cent, and then up again, they will see that as very risky. They will see that as high risk danger because its volatility is big. The price, even if it goes down, let's say, Bitcoin one day, it was like, $10,000. It goes down to 3. They go, oh, this is so risky. The price went down. That's how they measure it. It's also interesting to think about their incentives. When you're a VC or a fund or these types of people, most of them have bonuses that they want to achieve by the end of the year. So they're worried about their commission. So they don't care if Bitcoin or Ethereum or any of our altcoins succeed in 3 years, 5 years, 10 years. They don't care. All they care about is the price in exactly December 31st at the end of the year. That's what they care about because then they can close their positions out and they can get their commission. All right. Now, of course, traders are in there as well, but traders can't hold forever. There is a borrowing cost when you're doing the leverage trading. You can't be expected to hold forever and price that in. It's too outside of your spectrum, right? So these people are measuring risk like up and down prices. This is wrong. So I've spent some time on this because you probably think about it like this. You believe that if you get into a coin and then the price goes down and go, it's so risky. I want to tell you something though. If you had a crystal ball, and of course there will be a crystal ball emoji, friends. If you had a crystal ball and I could show you through the power of remote viewing, if I showed you what the price of the asset that you hold was in 5 years, let's say Bitcoin. Let's say Bitcoin in 5 years is $180,000. Let's say Ethereum is $30,000. Let's say Hex is $2. Let's say ChainLink is $300. If I told you the price in 5 years and you knew that was going to happen, does it actually matter if the price dropped 80% today? No, it doesn't. Because you know in the future what its price is going to be. Now, this is a cute example to show you that, yes, now you're starting to see, you go, wait a minute. If you know the future, then anything that happens before that doesn't really matter. Now, of course, this is an example. You never know the future. We're always dealing with uncertainties. But I want to take a clean, crisp, pristine example where you're sitting on a squeaky chair, having your 3 ice cubes with the orange juice, enjoying everything. You got to understand that this is the optimal scenario. So yes, in this world, you know the future. But in our world, we don't know the future. So that's why these people, all these people who are trading all these funds, that's why they say the world is chaotic. That's why the risk is actually the price is going up and down. But is it? No. Because even if you go listen to the greatest investors, they won't say this to you. What they will tell you is the best investment to have is the one you can hold forever. Sir Warren Buffett says this. All of the greatest investors say this. Of course, intuitively, it makes sense. If you find something that is just going to keep going up for the next 10 years, 100 years, that's the one you want to hold. Okay, now this kind of makes sense why Bitcoin is so loved by Michael Saylor. He treats it like New York real estate because New York real estate, the city has just grown around it and has become more scarce over time. That's how he views it in his mind. He does not view the risk of things just going down. Now, of course, it hurts. Just because we know this, when these red candles come, of course, it hurts, man. It hurts. You get kicked in the nuts. It steps on our throats. I understand it. But this is the truth. The truth is it actually doesn't matter. I'm not saying our feelings don't matter, because our feelings do matter. Because, yeah, man, they do pack a punch when we go down. But this is what we're looking at. So what is the real risk then? Okay, look at this. Diamond hands. Funny, 3 years is nothing in stock market world, but in our crypto chaotic world, yes. This illicit substances roller coaster world, yes, 3 years is a lifetime. Diamond hands measure risk by evaluating fundamentals long term. Fundamentals. What does this mean? This means the chance of, you imagine yourself, okay, what are the chances of you holding something long enough and it deviating away from where you thought the fundamentals would have placed it in the future? So if you are holding something, so you have this arrow here, this is your arrow of time. So you start today. This is you. You're a cute little berry, right? And there should be a little berry emoji here because you are a little berry. There you are, friends. Look at you. You are a cute little berry. And what you don't know is what's going to happen in the future. Now, you are holding an asset. Could be any of these, right? Could you have? Let's bring them over. Let's copy and bring them over. We have them over here. You have any of these, and then you're trying to evaluate the future, and you want to see, okay, are we going to pump or are we going to dump? Well, you never know. You have to travel through the passage of time to find out. So you can't get reward without taking the risk. And the risk is that the future does not play out. That's what the real risk is. It's not where the price closes in 6 months or 12 months. It is the future going to play out or not. So with enough time, are you seeing this? You might see the fundamentals for something going up like that, okay? And now you're looking at the price, which is going to be in green here. Is the price going towards the fundamentals or deviating away, okay? At this point in the future, you have to set yourself a point where you just look at the calendar and you look at everything again. You reevaluate and you say, okay, are the fundamentals still going up? Have you noticed how when I say, are the fundamentals still going up? You see this yellow arrow up here? These are the fundamentals. I'm going to do dots here. These are the fundamentals. Are they still going up? Not the price. Okay, what does everybody do? What's our natural reaction? Our natural reaction is have a look at the price. Are we down or up? Do we finish a red year or a green year? How's the 3 months? Do we cross above the 200-week moving average? I understand that. That's what we want to look at. But that's actually not the quote-unquote pure, the real way. The people who win in the end, the people who amass all the wealth, this is all they're thinking about. They're thinking about, okay, what are the fundamentals? So if you have your little ChainLink, if you have your little Hex, your PulseX, your PulseChain, Hedron, Icosa, Poor Pleb, Ticker PP, if you have any of them or any of your other coins that you love, set yourself every 6 months and you evaluate, you say, okay, what are the on-chain fundamentals? What is happening here? And you're going to look, understand, if you're new here, welcome, like, subscribe, baby dolls. I want you to know the cheat code is check the number of users, check the number of nodes, check the adoption, check the network effect. These are all the same thing, the number of people coming in. This is what you want to see. This is the fundamentals. We are not stonk market boomer world. In stonk market boomer world, what you will do is you'll look at the balance sheet and you say, aha, I see money coming in. I see cash flow. I see this company selling fluffy slippers. They're advertising them and people are exchanging their fiat for these fluffy slippers. In crypto, we are such a long duration asset. The market does not have any cash flow today. So do we get a valuation of 0? No, that would be too easy, wouldn't it? The market prices things based off Metcalfe's law. The market looks at the number of users, the number of nodes, the adoption, the network effect. How many people are there in the network? Are we growing the community? Are we growing the number of nodes in the network, or are we shrinking them? Are there developers joining, or is it contracting? When the numbers are going up, the price will eventually catch up to reflect it. So this is what you have to look at every 6 months. Now, I understand as well. That's why I'm here to help you along the way. It's tough. I understand. When Bitcoin and Ethereum are down, Okay, when Bitcoin and Ethereum are down, friends, I completely understand. You see Bitcoin going, yeah, like this. I know it's very hard to evaluate because everything is down. Every single coin wrecked. Everybody's left the game. No one wants to look at it. So how can you give a solid fundamental evaluation of that? You can't look at just that one day. And I promise you, there is no formula anyway. You just have to have faith. You got to have faith that eventually that 3-month candle for Bitcoin reverses and then we continue on our merry way. Now, I understand this is not a perfect world. This is not everything that we wanted, but this is the game. The game is you got to have blind faith. You either have conviction or you don't. You're either in the game or you're not. Because we're outsiders. We don't have all the insider information. Everybody in the tent, they're partying, they're eating their berries and their bananas, they're having wild orgies, different oil wrestling contests, all these weird stuff going on, eating sausage rolls. We are not in the tent. We don't have the insider information and we never will. We have to participate on the public markets. So what can we see? The people. And let me tell you something else. All those insiders having those little oil wrestling contests and eating their wild berries inside the tent and listening to music with disco balls, all of them can't win without increasing the number of people and the users anyway. Okay? So, yeah, you might think they have some advantage, and they do from time to time. They might know there's a big release coming, there's a big update coming, there's a big sponsorship coming, whatever. But you and I, it's fair game. We can see the number of users and people joining. It's a public blockchain. You can see Twitter, YouTube, anywhere you go. Is there marketing? Is there people who want to join it? Are there people talking about it? We can view this ourselves. So crypto is the great equalizer when it comes to this. So if we can grab this information, we get the edge. Okay. So our risk, remember, we're talking about the risk. Our risk is that the network doesn't grow like we believed it would, that people stop joining. That's the risk. All right. The risk is not, to me, it's not that, okay, we didn't close where I thought we were going to close in December. I didn't care about that risk. Also, on the contrary, right, just because your coin goes up, okay, so you know this green candle here, this was the coin price. Just because the coin goes up doesn't mean there's no risk, okay? This is something to think about. It could be that somebody shielded, somebody marketed, and for some reason there's just a burst of people who've come in. You have to evaluate, be honest. Do you believe the people joining in are going to be there for the long term? That is something you can only understand by punting, okay? If you punt long enough, you get a feel for it. You know, the good thing about crypto is 99.99% of everything freaking goes to zero and dumps like a truck anyway, so which is sad. So by default, if you just have a skeptical, myopic view saying, oh, well, it's going to go to zero, you're safe. That's why people just always say, take profit. That's where it comes from. It's the fact that there's 50,000 coins. We had China narratives, we had AI narratives, we had meme coin narratives, we had Bitcoin to $1 million narratives, we had DeFi narratives, Bitcoin fork, fair launch narratives, DeFi narratives. Every single narrative you can imagine, everything freaking goes to zero anyway. So it's up to you to decide. Is the green candle you're witnessing, is it a long-term sustainable pump? Most of the time, it's not. Okay, but now you're looking at these fundamentals. You're trying to evaluate these. You're trying to see, hey, in the future, are they going to be around? Or if they're not here, are they going to arrive in the future? This is the ultimate game. That is what we're talking about when it comes to risk. This is different to what the VCs, the paper handlers are thinking about. They're thinking about, okay, I bought it at $10. Is it going to be $3 by the end of the year? Or is it going to be $20? Wow, look at me. That's how they're thinking. That's how they're talking. We are not like that. Okay. The beautiful part as well, not only do you and I have friendship, but they're printing money every year. They are distorting the markets for us. I even have a flashy for you. Bitcoin, Ethereum, inflation, fiat, Link utility, Hex, community growing, PulseChain, community thriving, all these ecosystems. All right. They keep printing money. And because the insiders having their wild parties, they're getting first dibs on the money. They'll eventually hand it out. It'll try come into the crypto casino. There's not going to be enough seats for them. We're going to be walking around our fluffy slippers, straight back, and our squeaky chair is going to be waiting for us when we get back home because we know the journey's only just getting started. Remember this lesson about risk. Risk is not that the price went down or up. Risk is the chance of what you expected in the future deviating from where you thought would actually happen. Give yourself years, not months, for this to play out. Tell mum and dad we love and appreciate them. Like, subscribe, bell button and all. I will catch you in the next one.